8:44 now. Now that we're almost into 2024, a lot of people who are planning to retire are likely reviewing their game plan, something that's also important, you know, if you're 30-something too. But one of the possibilities for people who are a bit older is downsizing, which involves a lot of components. A smaller house, for example. Ernie Burns with Burns Financial is here to tell us about some of the things to consider. Good morning.
Good morning.
So, I mean, a lot of people have friends who maybe did well in life and they get to a certain age and decide, I don't need this big house, 5 rooms.
And it's not new. People have been trying to downsize for years when they retire and they're looking, the children moved on, maybe even the grandchildren moved on. They don't need as much space to maintain. They don't want to cut the grass. They don't want all that maintenance anymore. So they start downsizing. But things to consider is if you're single, the first $250,000 is exempt. If you're married, the first $500,000 is exempt. So you don't have to worry about capital gains in a lot of cases if your home is reasonably sized.
The profit that you make on the house. All right. And a lot of people find that a smaller place, depending upon where they are in life, adds to quality of life?
It does, because you don't have as much maintenance. You have
lower
aggravation and less stress. Just watch out for interest rates right now, though. So that's why you don't see as many homes being sold right now, but a lot more being built right now. So be careful of the interest rates right now.
Well, I mean, there are a lot of young people who are making a little more money, or they've got a little equity, whatever. They want to move up. It's time to move up. The family is expanded, and they're having trouble because the mortgage rates are so much higher that they couldn't afford the house they're in now if they looked at it.
Right, and so there's not many homes for sale. So what you're seeing right now, D.H. Horton and many others, they're builders. The builders right now are building a lot of new homes, but not a lot of new homes for sale.
Which is helping prices?
Yes, it is helping. Our economic activity is up right now, 5.2%. Our inflation is going down, but our unemployment is staying very low. China would kill for our economy right now.
Yeah, and the interesting thing about that is, you know, the narrative was that, and China's economy has been growing relative to the United States and gaining on us, if you will, but they have some long-term issues there.
Yeah, until lately. In the last year and a half, they've slowed down a lot. They have huge unemployment. Anybody under 30 years old, I think only 50% of the nation is actually working right now. So they have a lot of unemployment issues right now. Their economy in the last year and a half has really slowed way down.
In the meantime, Ernie, anybody who's looked at the stock market knows that it's got a nice, to put it mildly, Christmas rally going. 35,469 right now for the Dow, up about 55 points today. What's happening?
Well, we're looking at now that the Feds are not going to raise interest rates. Inflation has been coming down steady. Over the last 12 months, it's come down 10 different times, which is great. It's held steady twice. But now the Feds we know they're not going to raise interest rates in December, possibly not even in January. They might have done enough of all that. They might have increased it long enough. Now they're looking at when will they start reducing interest rates. And now we're looking at mid-next year, possibly soon, but probably mid-next year. That's very positive for the market. And with this Christmas rally that we have right now, it's in equities that are quality equities right now, they're going to keep growing.
All right. Ernie Burns, thanks as always.
Thank you.
All right.